So this is chapter 2, in-class exercises. We're on number 5. So this looks like lots of journal entries. So before we get started, I'm just going to do a quick review of how our journal entries work for product costs. So we always have purchases, and we'll purchase raw materials. And so whenever we're purchasing raw materials, it'll be a debit to raw materials, right, and a credit to either AP or cash. And then the next thing that's going to happen is they're going to be a requisition, which means they're going to start building the product. So they're going to start moving materials from raw materials to either goods in process or goods in process or work in process. So basically, you're building something and it's in process. So it's either GIP or WIP. And remember, it's either going to go to be part of direct materials, direct labor, or overhead. And so remember, direct materials is a prime cost, and direct labor and overhead are conversion costs. So once the goods are finished, we're going to have some direct labor costs too. So we're going to have to pay workers. So we're always going to debit direct labor or indirect labor and credit either wages payable or cash. The fourth step is to apply overhead based on our predetermined overhead rate. So remember, we use the predetermined overhead rate because we don't know exactly how much our costs are going to be because they're going to fluctuate. But in order to price out things, we make an estimate. So we're going to apply the overhead based on our predetermined overhead rate. So then we're going to move things once they're finished to cost of goods sold. So we have our account in cost of goods finished, cost of goods ready to be sold. So they'll sit here in finished goods until we make a sale. Okay, so once we make a sale, we'll debit AR cash depending on how the person pays, and we will credit sales revenue. So we have our income statement here. So we have our cost of goods sold, and this cost of goods sold is a debit once we make a sale, right? So then the last step is our factory overhead or manufacturing overhead. This is a temporary account, and so it's going to be closed out at the end of the period once our actuals come in, okay? So I have just some notes here just because there's a couple formulas in this chapter. Predetermined overhead rate equals the estimated dollars over the estimated activity, and this is management's decision. We have job order costing, so we're going to use the job order cost sheet as our subledger for every job. So every job, you can allocate specifically direct materials to that job, direct labor to that job. And then we're going to have process costing. So there's going to be a separate goods in process or separate works in process account for every process. All right, so that's just a quick review before we start getting into these journal entries ourselves. So first thing we do is $94,000 in raw materials were purchased for cash. So for purchasing raw materials, we're going to increase it $94,000. So it's going to be a debit to raw materials, and we're going to put A because it's transaction A. And we're paying cash, so we are going to credit cash because cash has a natural debit balance, and we're going to decrease it. So that's A. So B, $89,000 in raw materials were requisitioned for use in production. Of this amount, $78,000 was for direct materials, and the remainder was for indirect materials. So what do we know? So whenever we see requisition, it means it's coming out of raw materials. So in total, that's $89,000. So we're going to credit raw materials, $89,000. And let's see. Of this, $78,000 was for direct materials. So if it's for direct materials, we're going to do it to work in process. So work in process, $78,000. And then the difference, so is that $11,000 is going to go to manufacturing overhead. So these A's and B's, these are the transaction letters. So just make sure you put those or it'll mark it incorrect. So what is C? Total labor wages, $132,000 were incurred and paid Of this amount, 112 was for direct labor, and the remainder was for indirect labor. So if 132,000 was paid, that means it's paid in cash. So we're definitely going to credit cash 132,000. That's going to be C. Of this amount, 112 was for direct labor. So we know direct labor is work in process. So we're going to do C, 112,000. And the remainder was for indirect labor. So C, let's see what's the difference. 132 minus 112 is 20,000. So we're going to debit manufacturing overhead 20,000. Okay, so that's C. D, additional manufacturing costs of 143,000 were incurred and paid. So if they were paid, we know that we paid in cash. So we're definitely going to be out 143,000 in cash. So we're going to credit cash and additional manufacturing overhead. So this is for manufacturing overhead. So we're going to put it to manufacturing overhead, 143,000. And that's it. E, manufacturing overhead costs of 152,000 were applied to jobs using the company's predetermined overhead rate. So if they were applied to jobs using the company's predetermined overhead rate. So what happens if they apply it to a job? So we're definitely going to reduce manufacturing overhead. So we're going to credit manufacturing overhead, 152,000. And then what else? So what's going to be our debit? So our debit is going to be work in process, okay? Because we were applying it to all the jobs. So all of the jobs in progress at the end of the month were completed and shipped to customers. So that means our ending balance is going to have to go to finished goods first because it has to go from work in process to finished goods. So that is going to be 342,000. And it's going to go to finished goods. So 342,000 were completed and shipped. So if they were shipped to customers, that means they're going to be part of cost of goods sold. So from there, we're going to do 342,000. Oops. Here, 342,000. So that's going to be a credit, so we're going to have to debit cost of goods sold. Okay, so we moved it out of work in process to finished goods, and then it says we shipped it to customers, so then we moved it to cost of goods sold. So any underapplied or overapplied overhead for the period was closed out to cost of goods sold. So look, we have an ending balance to manufacturing overhead. So if this ending balance is a debit, that means we're going to have to credit manufacturing overhead. The difference, because remember, this is a temporary account, and so it's going to close out to cost of goods sold. So if we're crediting that, we're going to debit cost of goods sold. So that should give us what we need. So let's just check our work. Okay, excellent. And then what's our last question? Determine the cost of goods sold for the period. Well, it's going to be 364,000. Because our general ledger says that's what our amount is. So we'll just score this question. And these are all the right answers. So good job on that one. That was a long one.